Hi there, this is a teaching coming to you from the Training Place of Excellence, and it's a teaching on double entry for purchase returns. So you have purchase returns. How would you deal with it? What would you debit? What will you credit? That is to say, what ledger account would you debit and what account would you credit? And we're delivering this under our when season. A season and a time when we're just asking ourselves and when. When something happens, what would you do to account for that transaction? And it says towards the purchase returned. When an item is returned to a supplier and VAT was charged, what will be the double entry posting? You returned an item to a supplier. What is taking place? Purchase returns is taking place. Automatically, purchase returns account will be affected. If the customer, the supplier, the original transaction had VAT, when you are now returning it, or vice versa, when the customer is returning it to you, VAT account will also be affected. Because it is purchase, when you bought the item, you were charged VAT. VAT on purchases will be an asset. But now you are returning the item. So technically, you didn't buy the item. So you can't claim the asset. We want to remove the asset. What asset? VAT on purchases. We want to remove it from the relevant account. Which account is that? VAT account. So you will credit the VAT account. That is to say, do the opposite of what you did originally when you bought the item. Then as well, if it is a credit transaction, you will find that when you bought the item on credit, you were owing the supplier, that is creditors, which is a liability. Okay, I'm no longer owing you because I'm taking the item back to you. Or if I took part of the items I bought back to you, that means that I don't owe you the full amount. The amount I'm owing you will reduce. The amount I'm owing is a liability. So we're then saying reduce the liability by the gross amount of items that you returned to your supplier. Hence, you have here, you debit PLCA with the gross amount. You are having a liability there. The liability is reducing. Remember your dead click. And your VAT on purchases is now reducing. VAT on purchases is an asset to you, and that is now reducing. Then you have the purchase returns. Purchase returns is seen as income in your hands. That income is increasing technically, or better still, when you bought it, it was expense to you. Now, it's the opposite. It is now an income to you, or classed as an income to you. Hence, you credit purchase returns with a net amount. Remember, debt click, you're debiting expenses, asset drawings when any of these are increasing, and you're crediting liabilities, income, and capital when any of these are increasing. So your PLCA is a liability, and the liability right now is reducing. Hence, we are doing the opposite of what we have indicated in there, because it is reducing. The liability that you owe to your supplier is reducing because I returned an item to you. So technically, I don't owe you that money anymore, So I want to decrease my liability. Which liability? PLCA. When you bought the item, you were charged VAT. VAT on purchases is an asset. Now we want to reduce the asset. VAT on purchases is an asset to you. And now I want to reduce the asset. In order to do that, I have to credit the asset account. Why? Because it is decreasing. I'm crediting the VAT. And you have purchase returns. Purchase returns is taken as an income in your hands. Literally, it is you technically saving on your cost or reducing your cost or getting your refund. back. It will be classed as an income. And in this case, the income is increasing. Hence, we are crediting purchases. I hope that has been useful. When you have a purchase return, you need to remember you will debit your PLC, credit your VAT, and credit your purchase returns. Again, we hope it's been useful. The knowledge of your double entry in an account's capacity is very, very important. Don't forget, please, hit the subscribe button, like us, follow us, connect with us across all of the social media platforms. Laters.